Well, on business this week, we've got Chris Hart now joining us. He's Global Market Strategist at Standard Bank. New job for him, and Standard Bank Wealth and Investment. And Chris Gilmore stays with us at the moment. Chris Hart,
Yes.
Let's kick off first. Now, this afternoon, in fact, the Rand took a hammering. Yesterday it was around 13 Rand 90, around about this time in the studio. This afternoon it hit 14 Rand 17,
Yes.
which is a record weak level.
Absolutely, that's against the dollar. It was virtually unchanged against the euro because it was mainly dollar strength that did it. And the reason is that the US is probably going to raise rates as a consequence of this bit of data that came out, because it's indicating strength in the economy, and the Federal Reserve has been speaking themselves into a rate hike. Now, what's interesting is the dollar is the last one standing, because China has weakened against the dollar. Emerging markets as a whole have been weakening against the dollar. Europe has weakened against the dollar, and that just leaves the dollar standing there by itself. And they'll raise rates, and I think this is going to exacerbate. So what was interesting is that we've seen in earnings, US earnings, quite disappointing this last quarter. In fact, Bloomberg's report was it was the weakest quarter since 2009. That was global financial crisis, and yet European earnings are actually quite buoyant.
Yeah.
And that disparity is mainly because of the currency play. So I think you also saw this afternoon, as the euro really took a hammering, euro shares actually held up and in fact were boosted by that, whereas US shares are actually turning negative.
So a big question mark, let me bring it to Skoko, a big question mark about whether a rate hike in December is back on the table. Should that come through? Let's talk about the different scenarios for the South African context. Are we likely to see our own interest rates begin to tick upwards this year still?
Do you know, Barclays is looking for March 2016 as being the first rate hike in the US, but as Chris Hart was saying, I think it's looking more likely now. I saw a consensus view of around about 75% now
Yes.
is being factored
Looking
in.
at December.
Yeah, for December.
Yeah.
So as far as we're concerned, look, opinions vary. And I think, I'd love to hear Chris Hart's view on this one, but my view has been that, yes, I suspect South Africa, along with other emerging markets, will feel duty-bound to raise rates to try and preserve the currency. But the other side of the coin, of course, is that if you do that, you further weaken an already weak economy.
Right.
Yeah.
Chris, your view on it? He's asked for it.
Well, my view is that firstly, I think that the Fed is going to actually find an escape clause for December. December is just not a good time to rattle markets. And I suspect if we see a big pullback in equity markets, they may say, "Oh hell, we need stability first," and still kick it out to March. My view is that low interest rates have contributed to the low growth scenario that we have. In other words, it's part of our problem, because effectively, to fund growth, you need saving, and the interest rates are too low to actually boost savings. So you're seeing savings
In fact, they're
around.
punishing savings.
Exactly. You are seeing Europe, US, etc. Savings are actually been declining on a secular basis, as interest rates have been declining on a secular basis. And I think it's part of the low growth problem. The other part of the low growth problem is in your scarce resources. We're funding more and more to regulatory compliance instead of towards growth. And that's a worldwide phenomenon. It's not just South Africa. And those two particular factors are very similar to the reasons why the economies were not growing in the 70s. But then we also had inflation. In other words, it was a stagflation condition. But instead of the regulatory cost, we had the costs pushed by the parastatals, the various parastatals around the world, where you're just adding on your costs.
Administered costs.
In other words, it was administered cost price inflation. The moment you had privatization at the end of the 70s, you ended that inflation. And then, of course, you also had other measures with higher interest rates, boosted savings, and then lower tax rates helped to shift resources back to the private sector, which was higher multiply activity. And through the mid-80s right to 2000, you had the opposite of the stagflation of the 70s. You had actually persistently high growth and persistently low inflation.
So I think the historical context is important, that the insight that you're giving us now. But perhaps if we were to look at the future and the context that we're in now, and maybe to both of you, Chris, that Where are the opportunities for South Africa? We're always talking about a weaker rand and how this is good for our exports. No. But what kind of action can we take to benefit as best we can from the current situation?
The past experience with South Africa, the moment the currency weakens, it's just been followed by inflation. In other words, the weak currency just gets replaced by higher costs. And so your weak currency so-called advantage leads to more currency weakness.
It helps only the specific companies that might gain a bit more.
But it's only on a short-term basis. However, what we have seen, because of the weakness of the economy, you've got the cost push of the rand, but you do not have the demand pull of what would be a normally buoyant economy. So you've actually had remarkably little inflation translation into the economy. If you had the full translation, if inflation would be maybe three percentage points higher than what it is. All right. But what that means is that our bombed out sectors like mining and that type of thing may actually start to hit the sweet spot of rand leverage gearing. All right. And if basically you can contain costs, right, and still in other words, soft currency costs with hard currency earnings, you may actually start seeing that those sectors revive.
Let's pause on that and get to South Africa and the drought. There's been a lot of heat in October, no clouds in the sky like we usually have. People are saying it's the worst since 1982. So we've been there before, water restrictions perhaps. Now here's a little extract talking about one of the issues of farmer debt levels and how, of course, that's worsened by the drought.
The reality is the financial services industry ends up in a problem here too. How do they manage their risk in times like this?
Absolutely. I think the financial services industry is highly exposed to the agricultural sector. Just last year we estimated that the financial services, just the four big banks, are holding about 120 billion rands worth of farmers' debt. So it's quite significant, and I think that's normally maybe something that we don't consider. So a lot of farmers are indebted. Those who had planted last year and had crop failures will obviously not be able to repay those loans. That affects their credit worthiness. And of course, banks are tied in terms of what they can do in terms of the National Credit Act. You know, they can't engage in those reckless lending practices. So a lot of farmers are in a position where they can't get that credit, and I don't know what they're going to do.
Chris Gilmore, it always strikes me, and as I say, we've been here before. We've had times where the dams are low and the farmers are in trouble. The irony is that in South Africa, the farming sector, the agricultural sector, was the one that was thrown to the wolves. No protection. Compete on the open markets, no control boards anymore. You could argue it's the one sector that if you're going to have protection because of things like the weather, you need it. But they haven't got it. They've actually become quite efficient. How bad is this? I mean, are people asking you, is this going to affect investment perceptions?
It probably will, because it's just going to add more fuel to the fire. And let's not forget that a drought tends not to last 1 year, it tends to last quite a few years. I mean, this has been precipitated, no pun intended, by the El Nino effect in the Pacific. And I do remember 82, and it really was quite severe. But from my recollections, this seems to be an awful lot worse. This is really, really bad. And this is going to, I mean, Chris Hart will be able to confirm this, but I think agriculture accounts for about 7 or 8% of the economy these days. It's relatively low, and probably getting a bit lower, in fact, as we become less and less able to have full food security.
So I don't know, the level of money in me, Chris wants to ask, who's making money out of this? I'm thinking of the insurance companies who could maybe in the short term be making some sort of money off this rather negative situation.
I think there could be, but insurance companies usually are the, if they're trying to, if you're insuring against the downside, this is downside. Okay, the financial services certainly are exposed. The thing is, agriculture might only be providing, I think it's just under 2% of the economy, but there's an enormous multipliers. In other words, what's classified as agriculture, all right, is pretty defined. The moment you take it out the cow, that's farming, but the moment you put it in the dairy, it's now manufacturing, all right, and so you can take that 2% away, and you'll probably take about another, maybe 10% of the economy away. The same with mining. They say it's only 6-7% at the moment, but you take that away and you take away an enormous multiplier.
Jobs. I mean, it's something like 650,000 people employed in
yes,
that sector.
Exactly. But I'd like to say, whereas the debt levels are high, is a lesson that when times are better, you've got to build up your reserves, because to carry you through the downside. But what is not being mentioned is the fact that there's enormous area in agriculture where people cannot get access to finance,
Right.
and that's because of property rights.
Yeah.
In other words, the black areas, the traditional homeland black areas, in apartheid terms, do not have title. And this is the whole point about land reform. It's all focused on the white areas, but we are not doing the land reform where it actually matters. In other words, giving people what they've already
So
got.
we need better land tenure models so that we can
that it's collateralizable.
Right.
Because farming, you're asking people to compete not in equal terms, because the whole point about farming is you've got the very, very uneven cash flows. So you need the property as the collateral, the balance sheet, right, as the collateral to actually carry you through the negative cash flow times to when you actually harvest it. So the positive cash flows over a fairly short period of time with farming, and that's why one needs to have a proper commercial model for farming, and we don't have that, and you'll never get the proper transformation of that sector if we're going to actually have land reform the way we're doing.
What about the
and
food
do that.
companies, Chris? The pioneers and the Tongarts. There's a food security issue here. There always is. I saw a report in the newspaper this morning. Vegetable shortages, fruit shortages possibly coming. Prices go up.
No, absolutely. And I mean, look, they are in the manufacturing sector. And coming back to what we were saying earlier, let's not forget that most manufacturing concerns in South Africa, there's a huge imported component goes into them. And I mean, even in the food companies, I mean, okay, you'd think intuitively that they're going to get all of their input locally. Maybe not. So I think they're going to get a double whammy, quite frankly. And it means the consumer, already beaten down, is going to have to be paying more and more and more.
Although what you will see in the very short term, you're going to have a windfall for consumers in lower meat prices, even though vegetable prices are high.
Because they're going to have to slaughter the animals.
Yes, but then that comes through with much higher meat prices later because you've now got a much smaller herd and you've got to build that up.
So the emergency alert that I'm taking away in all of this is that if there's no rain and there's drought and then you can't grow grapes, the price of wine is going to go up, and this is going to be a terrible, terrible
have
situation.
a braai, but don't have vegetables with a braai, just plain braai.
Of course, SA Breweries is moving towards water neutrality so that they don't waste more water than they use. So I think one has to drink beer and save water.
Yeah,
Absolutely.
drink beer, save water, and let's please fix the drought situation. Wine cannot get off the menu. A big thank you to our Chris's. That's Chris Hart and of course Chris Gilmore joining us there to have a look at the macro matters